Hi, this is Randy Finney with Right Side of the Chart, and today is Thursday, February 22nd, 2018. In this video, we'll take a look at the active trade ideas on the site. If there's any time permitting, I'll go over maybe a few other potential trade setups that I'm watching. And before I get into the trade ideas, we don't have too many. I think there's, looking at another screen here, only about 8 active trades at this time, which is a reflection of both market conditions, a little bit of uncertainty in the near term, as well as the fact we just closed out a lot of trades in the past few weeks, both longs and shorts, book profits. So I do have a watch list, and I've been a little reluctant to add back new setups. And this is where I wanted to start out really just with a quick overview of the broad market. Um, Everything when trading, especially swing trading. Um, Take into consideration your outlook for the broad markets, because when you enter a period of consolidation in the broad markets, just about any stock, especially if it's a component of the S&P 500 or a major index, NASDAQ 100, even the small caps, which are going to trade roughly in line with the large caps and mid caps. When you get that choppy consolidating price action, a couple things happen. Especially again, this is I'm speaking as a swing trader here now, somebody with a time horizon of just weeks to months on those trades. Longer term investors not need to be overly concerned with the near term zigs and zags of the market. So where I'm going with this is when you get this, we had a strong run up as I covered recently and mentioned that I booked profits on a lot of my index shorts right here when that second target on SPY was hit, because we were stretched near term, and a lot of things that I was seeing in the charts indicated we'd have a pullback, and I stated as such. So now, and it's been a sort of a chop fest since then. We hit that target on Friday. Today's Thursday, so almost a week of sideways to downward action. And so what that does is it carries over into individual stocks, which are components of these major indices, and as well as the trade ideas that we have. So where I'm going with that is when you suspect that the market may have a period of consolidation or isn't going to be trending, upwards or downwards in a pretty consistent trend, you may want to step back and be a little extra selective on entering new positions. Or, for example, if you were in agreement that the broad market was due for a pullback, I'll take a little breather there, some consolidation, and you had other long positions, maybe they were close to their targets, it would have been a good time to book profits there as well. And again, treat every position um, individually, but I guess what I'm trying to say, and it maybe contradicts that a little bit, don't trade that stock in a vacuum. If you're trading, for example, the JJG trade idea that we have now is wheat. It's commodities. It's wheat, corn, and soybeans. It's an ETF that holds those three commodities. They have nothing to do with the stock market, so therefore that position shouldn't have much of a bearing. But some of the other ones, like GE, for example, and XLE, the energy stocks. XLE is a big component of the S&P 500. I'll get to that in a second. Those are most likely going to trade in line or be affected by what the broad market does. So enough on that. Just wanted to kind of give you my mindset, and that's also why my analysis has been light recently. Because as I stated, just the near-term direction, I shared my thoughts. I thought we'd have probably a sideways to downward bias, but longer term, I'm still favoring once this corrective phase or just this little breather, we'll call it, in the market is over, we'll probably continue on upwards. I still think we have another thrust. So I shared my thoughts in yesterday's market update. Maybe we pull back down here to this target, maybe not. As I often say, um, prices or big moves in the market or any stock can correct in one of two ways. They can correct in time and or price, so that can be a combination of the two. So in this case, we have a correction more so in time, but somewhat in price. See a slightly downwards to sideways trading action over the last week or so. And that's enough. What that does is when you trade, even if you're trading completely sideways for a period of time, you'll notice, or you can see here, we went from overbought on the RSI, and down to almost, we're down around the 47 level. So we're no longer overbought on the RSI on the 60-minute time frame. Okay, let's dive into the trade ideas again. Nothing has changed since my market out update yesterday. I'll go through these in alphabetical order. AOBC, American Outdoor Brands Corp. Still looks good to me. Remember, we put this one on before the recent school shooting. It's a huge tragedy. As I said, there's often in the past there's been actually a boost to these companies' bottom lines. This time around, we saw a little knee-jerk reaction. We saw some selling. The trade is still, I don't know, we're probably right about entry. I can't remember exactly where we entered on that one. It's up. It was up over 5% today, pretty sharply, down the other day. It's grinding around, but here's my thoughts on this one if you're in this one. Number one, I did make a revision. I posted this within the trading room. I had previously stated the earnings as March 8th because that's what was given to me on earnings.com. Um, those earnings sites, when you're pretty far out after a company reports, they guesstimate the next earnings, just basically 3 months after the previous earnings. But a company, as you get closer to the quarterly earnings, the company will then announce the exact earnings date. And AOBC, American Outdoor Brands, did announce just recently they'll be stating they're giving their earnings and guidance on March 1st after the market close. Wanted to point that out for two reasons. Number one, if you're in the trade, you only have about another week or so before earnings. Your decision as a trader whether to hold through earnings or not. It's been my experience that more often than not, any surprise to the upside or the downside is indicated by the charts. And what I mean by that is if the charts aren't very clear and I don't have an opinion, it's a crapshoot. A stock can either gap up or down after earnings. But if the charts are clearly bullish or clearly bearish heading into earnings, more often than not, again, and that's far from always, but more often than not, it's been my experience that the move following earnings, forget about the initial knee-jerk reaction in after hours trading or right at the open the next day. I'm talking the trend over the next week or two is usually indicated if you have a clearly bullish or bearish chart. It'll play out that way. So we'll see. So I still like the chart on this one. The stop remains any move. I think it's below 979. We need to take out this trend line and the targets remain as is. So really no change there. And I've also been following the headlines on this. Obviously a good part of their sales come from firearms, and unfortunately, that a lot of the types that are used in these horrible mass shootings. But I think at worst, we're talking, maybe some legislation coming down the line that might delay the age. Trump's talking about stronger background checks, so I'm following that closely. If it looked to be an outright ban on where these manufacturers could no longer make those type of guns that are adding, unfortunately adding money to the bottom line, then I would probably pull the plug. But the market would also reflect that. So I don't think that's, at least at this point in time, a risk. And hopefully they get a hand on this and figure out how to stop those horrible shootings. Let's see. Next one up is corn. Uh, I'll jump over to this because as I was typing in corn, I had a price alert on OMI. I've actually had two price alerts today. I'll cover those because these are potential trade ideas. Somebody asked about this in the trading room the other day. OMI, Owens and Minor Inc. It looks like medical distribution. So what they're in, nice, strong bullish divergence on the daily time frame, as you can see here. This is a daily chart. There's your divergent low. A lot of thin air all the way up here to about 1815. So if this one can get some traction here, that would be my initial target. Maybe somewhere a little shy of that level. Then you can see I have a resistance level or potential target around 1973. 60-minute chart, what stands out to me is this potential, this is what we call a complex inverse head and shoulders pattern. It's a mouthful. An inverse head and shoulders pattern is a bottoming pattern that comes after a downtrend. So you can see a clear downtrend leading into these lows, and then you start to consolidate. That's an inverse head and shoulders. And a complex head and shoulders or complex inverse head and shoulders. Head and shoulders are topping patterns. Inverse head and shoulders are bottoming patterns. They just have two shoulders. So that would be left shoulder one, left shoulder two. That would be your head. Right shoulder one. When I was asked about the stock, we were right here, so I laid out a scenario of a potential second right shoulder, and that was at least a few days ago, and so far that's what's played out. So, um, not perfect symmetry because we didn't have a tag here of that left shoulder, but close enough. And most importantly, it's the fact that we have a pretty well-defined neckline, which is a downtrend line. It looks like a significant resistance level. The stock has been, as you can see, tapping on this level here. This downtrend line, it acted as support back here. So we've had several reactions. So there's your buy trigger. An impulsive break above there. I think my alert triggered a little early. I might have had that line set tight. I still don't see an impulsive move up through there. By impulsive, we mean pretty strong buying on increased volume as well. So there's OMI, potential trade idea. And while I'm on that here, I had this other, oh, wow, that one's ripped since I got the alert. I got that alert at 9:39, a little earlier. I had a price alert set above this trend line. I guess I just got back from, I had to run some errands this morning, had an appointment earlier this morning. This one's taken off, so we might have missed the boat. This is the daybreak line right here. There's 4 p.m. So you can see it opened this morning and it didn't gap up. It's run. This was yesterday's close right here. So since the open, this stock has now gained 38%, and yeah, that cost me a nice entry not being in front of my computer. I just got back in right after the market opened today, and it's already hit my first target. So too late to chase that one. So sorry about that. I wouldn't even have brought it up if I didn't realize that since I started this video, it already ran up there. Okay, corn. It's a commodity, steady eddy, nothing explosive, but just slowly but steadily moving up. We entered this somewhere back here. It's already taken out that first resistance level, and this remains the sole target at this time. So again, I like these ag commodities. They've been moving up, and I think we're going to continue to see that. This is part of my reinflation trade. I think we're going to see. Plus, these commodities are beat down, and the charts look good, or I wouldn't have put it up. And I'll get to JJG in a second. And remember, JJG, which is the grain ETN, holds corn in there. Corn is part of that. So I mentioned that when I put JJG up as a trade idea, that you'll have overlap and you have to account for that in your position sizing if you're long both corn and JJG. ENDP, it's holding its own. Story on this one. We hit the first target way back here. It's been very profitable trade. We missed that second target by just pennies, and it reversed from there. I had that target set just a little too close to the actual resistance, and there's a great example of how stocks sometimes reverse just shy of resistance. But we've remained above the stop. We're back above this trend line, which goes back for quite a while. I don't have it drawn out all the way here, but you can see a trend line that goes back until early 2016 or so. And there's that trend line right there. So again, looks good. You just have to be patient on this one if you're in it, if you didn't already book profits at T1 or when it got close to T2. But I still do like it, and it's just caught up along with the drug sector. This is a generic, I believe it's a generic drug company. So we'll just have to give that one a little patience. Sometimes swing trades pop real quick and play out, hit their targets within days or hours or weeks, and this one it may take a couple months. GE, I still like GE. I still think it's a bottoming play. Charts continue to firm up. There's that bullish divergence I highlighted on the daily time frame, the downtrend line it took out. And what happens is sometimes you have a breakout of a bullish falling wedge and the stock runs. Now I just jumped down to a 60-minute time frame. We were on the daily time frame a minute ago. Keep in mind, if I don't mention it, the time frame on my chart is right up here. So this is an hourly or a 60-minute chart. So there's your breakout. We ran into that first resistance level that I had here defined by that gap and reversed. So when you look again at the daily chart, it's more like a breakout and a back test, but we're still above the stop, and I still like it both on the 60-minute and daily time frame. And most importantly, if my scenario for just a little more, a little correction here in the broad markets like we've had over the last week, followed by another leg up to take out the recent highs. If that pans out, I would expect that would add some tailwinds to this GE trade. And there's your targets. So still looking good. I like that one. And if you haven't taken it already, I still like it here. I think this is a good time to buy. I forget exactly where we entered. I'd have to reference the post, but probably on the breakout here. So we're either at or just below entry. So still an objective long entry or add-on for those of you looking for some long trade ideas. IEF I still like as well. Let me jump back to the daily time frame. It's drifted a little lower since I've added this one on, but we're still very much above the stop. Remember, I went with IEF, which is a 7 to 10 year Treasury bond fund. I could have went with TLT in the past. I've traded TLT with bonds. The longer the maturity on the bonds, the more interest rate sensitive they are. So therefore TLT has dropped a lot much more, and that's why I avoided it. My conviction on a reversal, I think we're very close to a meaningful reversal in treasury bonds. But had you gone into TLT back then, let's just say I forget exactly where we entered, but TLT has dropped 3.5% or so, in the last, I don't know, it's a couple weeks here, where IEF, because again, they're shorter term bonds, has dropped a lot less, about 1.5%. So we're only slightly underwater, still well above the stop, plenty of profit potential. This is the daily chart, same price targets. On the 60-minute chart, we continue to, build some bullish divergence, positive divergences on that 60-minute chart. And, you can draw a downtrend line as well. It's not perfect, but you can sort of see the downtrend. This one's working its way within. So my take on that, just to step away from the technicals for a second and talk fundamentals. Here's my take. Fed minutes were released yesterday. They indicated the consensus was they're going to be aggressive. But remember, that was Yellen's last meeting. You have Jerome Powell coming in now as a new Fed chairman, and I'm willing to bet good money that the last thing he's going to do, quote unquote, his first, not metaphorically speaking, his first day of the job, but his first FOMC meeting, or in the first year, is knock the snot out of the stock market by aggressively raising rates. So we all know how this works. The Fed, they've done this since day one, especially over the last few years. Anytime the market throws a hissy fit, they back off their hawkish stance. So all this talk now, and as I said this when we, making the case for a reversal in treasury bonds as well as REITs and utilities, I think for the very near term, all of the future expected rate hikes and then some have probably been already priced into these rate sensitive assets, right? Meaning, treasury bonds, REITs, utility stocks, things like that. So if I'm correct on that and it was an overreaction, I do think, over time rates continue to go higher, and I do think we will see some rate hikes going forward. I'm not saying that the Fed's going to completely back off, but I think the expectation on how aggressively they were going to hike, I think that's been overdone. So we look at IEF, a couple other things you want to look at too when trading these bond funds besides IEF and TLT are the actual rate indexes. So here's your 5-year treasury yields. This is an upside down chart of what we just looked at. These are the actual treasury yields. And so what I see here is a very well-defined trend line here. I see yields, on the RSI overbought. There's been quite an advance. Again, these are the shortest, not the shortest term rates, but these are the 5-year rates. You can see they got pretty overbought here and they corrected. Very overbought. Most importantly, watch this trend line. So there's 5-year treasury yields. These are 10-year treasury yields. This is what IEF is tracking right here. So this is almost an inverse chart of IEF, that active trade idea. I see a high level bearish PPO crossover in the works. What I mean by that is when you have that's one type of sell signal. This was a bearish PPO crossover. When the PPO line crosses the signal line, you had that happen here, and that was followed by a downtrend. So these are buy and sell signals. I don't use them as standalone buy and sell signals. Here's a bullish crossover right here, and you can see an uptrend. So simple yet effective. When you have these whippy, when the lines are close and there's not a lot of separation, personally, I ignore it. I do not find any value because you're going to have whipsaw signals when the lines flatten out. So I stay away from it. However, we've had a pretty clean separation with the PPO line. Actually crossed over bullish here, successfully tested the signal line, remained above it all that time, and now it's at a high level, what I call a high level bearish PPO cross. So if, and it hasn't happened yet, these lines are flattening out. We don't have the cross, at least not a clear crossover yet. I want to see a breakdown here of this trend line, a bearish PPO cross. A bearish PPO cross means when the PPO line crosses down below the signal line, you're going to have almost the same thing happen on the MACD. MACD is a very similar indicator to the PPO, and that will be your buy signal on bonds. Remember, rates are and bond prices are inverse to one another. So when rates break down, it's a sell signal on rates, which is a buy signal on bonds. We go long bonds. You don't buy interest rates. You buy the bonds, and the bonds again move inversely to the rates. So that aligns well with that IEF trade. Again, treasury bonds, especially 10-year bonds, are not get-rich-quick instruments, but they're relatively low risk, and it also plays into the common theme that I have right now, which is we have some pretty nice diversification among the trade ideas on the site. We have various sectors, and we have, more importantly, we have asset allocation. What I mean by that is stocks are one type of asset class, bonds are another type, commodities are yet another type. So we have some of each, and so therefore that gives us a little wiggle room, whether you're a trader, long-term investor, even an active trader. If you're not firing on one cylinder, meaning the stocks, are going against us, or the broad market trade is going against us, maybe we're making it up on those commodity trades or on the treasury bonds. All right, moving on. Next up is JJG, which I talked on earlier. Again, this is just a combination. It's an ETN that holds grain, corn, and soybeans, if I'm not mistaken. Those three already hit our first target, and we've been consolidating around that area. Still looks good. PPO is now in bullish territory, clearly above that zero line. We just put in a divergent low. I may extend that target. And I'll tell you right now, if you ask me where I think this thing is going over the next 6 to 9 months, maybe throughout 2018, I think it's going a lot higher. So remember, most of the trade ideas on here are swing trade ideas. I do add some long-term trade ideas at times. I may have even added this as a long-term trade. I'd have to look at that. But it won't be a straight shot up, but I think ultimately we can work our way back up to these highs back in, we had double top high back in 2017. You can see JJG reached that level before. It also had some reactions there back in early 2016. So this is a longer term target for those of you looking to add commodity exposure in your portfolios, and you may not want to take the quick buck at T2. You may just want to set your stops at either at break even, at entry, or raise them along the way. Next up, SOXX. This is the only short trade that I left on after the recent correction. Most of the shorts hit the final targets, and I closed those out. But I made very clear my intentions at the time. I personally closed out, booked full profits there, as I was expecting to bounce. So again, define your time horizon. If you're a very long-term trader, trend trader, or an investor, and you're willing to ride out these counter trend bounces, I do think this one heads lower in the coming months at some point this year, probably within the next few months. You'll see, I believe you'll see this level get hit again, and then ultimately these targets before the year is over. So again, it's how much you want to ride. I mentioned, shorting this in the trading room the other day, after going, covering my swing short here, going long there, taking profits I think I took profits on the bounce about halfway up, but then recently shorted. So bigger picture on SOXX and the semis is a back test of this trend line. We went a little bit above it, but we're really stalling around the bottom of that channel. And remember, SOXX is only one of the three main semis I watch. I watch SOXX. I like to also keep an eye on SMH. It's just another company you can see there. Also, breakdown and a back test of that primary trend line. And then XSD. They're just different ETF companies. And this one is perfect back test. So from a intermediate to longer term perspective, this is still a sector that has clearly broken down a multi-year or 2-year uptrend line. All three of these main semi ETFs have broken down and they're back testing now. So um, this is actually an objective area to reshort or add back on. Although I would personally, I'd maybe consider holding off for swing trade right now and just watch. I'm giving a little more time. I'd like to see what the markets do, how aggressively people continue to buy up this the recent dip, the recent correction. If we stall out here, turn back down, make another run for those lows, or especially take out the recent lows, that's not going to be good, and that would be actually good for this trade. However, if my scenario of new highs in the broad market hold, I don't think semis will make those new highs. I think this sector has topped most likely, but any bid that the broad market catches will put a bid beneath the semis because this is a very large component of both the S&P 500 and as well as the Nasdaq 100. So I guess what I'm trying to tell you guys is it's very unlikely that the broad market rallies, let's say another 6, 10, 12, 15% higher and the semis drop 20, 30% over that time. Is it possible? Yes. Is it likely? No. So let's just say intermediate term right now, neutral or undecided on these. But again, as far as the trade goes, we're still well below the stop, well below. We're still profitable, below entry, and I'll let you know. I'll keep you posted on that. SPY, I've already covered my thoughts extensively. I still have UGAS listed. I mentioned in several videos as well as a trading room recently that this one just barely clipped the stop. I had a stop below 51.60, and you have to zoom in really close here. I mean, this one took it out by a penny. I think we went down to 51.55. So by a mere 4 cents, that stop was cleared, hit the other day. So officially that stopped out, but I did make an update in the trading room, and I believe in a recent video, I still like it. I still think it'll play out. It's just we just had barely had our stop clip there. Probably should have given that one a little more room officially in hindsight on the official trade idea. And then finally, XLE. I was asked my thoughts in the trading room the other day on XLE. In fact, let's pull that post up. XLE is a pretty significant component of the broad market. Let's see if I can find that post. All right, when you go into the trading room, a little tip: if you click on anybody's, what I think they call this a gravatar or something like that, click on that. If you click on mine, RSOTC, right side of the chart, it'll load all posts that I've made. And then you can see 2 days ago here, I was asked my opinion on XLE and XOP, and I stated that I think they're headed for a little more downside in line with the broad market this week. XLE has been consolidating around T1 since hitting it last Monday, and XOP recently reversed. And I also gave my downside targets. Here's those charts. Again, this was 2 days ago, so this is where we were. Figured XLE would have a little more downside. Still keeping it on as an official trade because I still think that second target gets hit, especially if my broad market scenario plays out. Again, trade this as you want. If you're an active trader, you had plenty of opportunities to book some profits here at T1 and recycle back in lower. Let's fast forward to today. That was again 2 days ago. You can see so far that's exactly what's played out. You can even see where arrow, that's about where I had that arrow drawn and showed it reversing here. And that's still my scenario. We could go a little bit lower. I still think that plays out. But again, that gave you an opportunity to either book profits or sidestep some of the give back on that trade and maybe even recycle back in. Again, if you're a very active trader. And if you're not, I get it. If you're a swing trader, just stay disciplined, set a stop. Wherever you want. I just give you suggested stops, and suggested targets. So if you have a stop there and profit target at T2 that offered an attractive risk reward on the trade, and hopefully it'll be hit just like we hit all these three targets on the way down. We shorted XLE on the way down and we went long at the bottom. This is swing trading, guys. Short the rips, or short the dips and go long on the rips. And then bigger picture on XLE, sort of a mess right there. Let's not get into that too much. Not a lot on the daily chart. And then also gave my opinion on XOP, which is another popular ETF. That's oil and gas exploration and production. And I, I said it may go down as low as 32.30, but I think it'll probably bounce around this area right here. So I give you these two scenarios. That was 2 days ago, again, from that post within the trading room. And where are we at now? There it is, where we did exactly what that first scenario had us drawn a line down to this support zone. So far, we've reversed off it, so good. So if you're in that one, again, this is not an official. I went with XLE as the official trade, but I mentioned XOP as well as XES. But um, again, you can find a lot of these in the trading room, a lot of these updates. And finally, the other update I gave, I won't go into it too much. Somebody asked my thoughts on gold and GDX. Keep in mind, if I don't have very strong opinion on something, I won't post. But again, as a member, I encourage you, if you want an update on anything, whether it's a trade, a official trade idea on the site, something I follow, something I don't follow, a position you have, if you're a gold member or a free trial member, just drop me a line in the trading room, and I'm more than glad to post either a chart or at least my thoughts. And on gold and GDX, I just said my convictions aren't very strong now, and trading can be tough enough. It can be extremely tough at times. Sometimes it's so easy, it seems like you're printing money for days or weeks, and then sometimes it seems like you just can't get out of your way. So over the years, I've learned be selective, especially when the near-term outlook is uncertain. And so, a lot of times you'll ask my opinion on the stock, and if I don't have a strong opinion, that's what I'm going to tell you. And what I've learned, if I can't make a strong case to be either long or short, clearly bullish or clearly bearish case, don't trade it. Step on and move out to the next one. Otherwise, it's a crapshoot. And you take enough of those pot shots, you're eventually going to most likely you're not going to do very well. So sit back, be patient. That's my trading style. It's sort of, I've used the analogy, you watch those shows on the Nature Channel with the predators like a cheetah, or a leopard out in Africa. They're not going to chase every gazelle that walks by. If they do, they'll run out all their energy and die and starve to death. They sit patiently. They wait for the right opportunity. Something's close enough. They see something they know they can catch, and then they jump out and spring on it. That's how I trade in the market. I will sit back, and if it takes days, weeks, or even months for the right setup in the market or a particular stock that I'm following to materialize, that's it. And if that setup never materializes, that's fine too. I'll track a stock for months or years and maybe never pull the trigger on it. So that's it. It's I find that in trading, less is more is what I'm trying to say. Don't overtrade and don't force a trade. But again, if you have an opinion or want an opinion on a position or a stock, just bump me and I'll be glad to give that within the trading room. All right, this has been Randy Finney with Right Side of the Chart. Hope you enjoyed it, and let's just see. I'm just still watching the market this week, kind of keeping things light right now, and maybe maybe towards the end of the week, well, tomorrow's the end of the week, or early next week, start adding back some trade ideas if it looks like this corrective phase in the market is over. Um, Hope you enjoyed it.